time, especially here in the night before Thanksgiving. So I know everybody's got a lot to do. So we'll try to keep this as brief as possible. But thanks again so much for coming to the webinar. Again, my name is Dave Wise, and I'm a professional options trader. What I'm going to cover today is I'm going to cover what's called the SPY Super System software. This is a software that I use in conjunction with doing technical analysis to find out if the institutions are in trades or not. It's very important to make sure when you get into a trade that the institutions are in there trading. Otherwise, you're just trading against a bunch of other retail traders, and that's not a good place to be. We're going to talk about the Compass Options text alert service, which is available, and also a live trading room. I run a live trading room 5 days a week from market open to market close. Usually I get in at about 9:15, cover some pre-market information, and we trade all day long. And if we can find some good trades, we don't take huge number of trades. It's not a scalping room. We're just looking for specific. We're just looking for some specific, very high probability trade setups to take. So anyway, let's move along here. First thing I have to do is I have to do the disclaimer. All signals and trading opportunities we provide here are for educational and demonstration purposes only. Trading is very risky, so you should never trade with more money than you can afford to lose. This is very important. You can read the rest of this if you want, but just be aware that trading is risky. So don't trade with more money than you can afford to lose. And neither myself or Right Line Trading are licensed financial advisors, so we won't be giving any financial advice. All right, now that we get that out of the way, if anywhere along this presentation you have any questions that you or you have an interest and you'd like somebody from Right Line to give you a call, like Rory, this is his number right here. Just put your name and number or your Skype name and username in the chat box, and he'll follow up with you and take care of that. We'll do that. You can do that anytime during or at the end, whenever you want to. So again, this is the SPY Super System. Basically what we do is with this software is we track institutional money flow. And this is really, really important, because when you want to make a trade, you really want the institutions in the same trade that you're in. You don't want them not in that trade, because if they come in after you're in the trade, you're going to get trapped. So that's what we call the super system. This, by the way, is just a graphic example of what the Compass System text alert service looks like. These text alerts will come on your phone as we send them out. It'll say David Wise Alert Service, and it'll give you the information on the options that we're taking, very detailed, very specific. It'll come right to you and tell you basically exactly what to do. And we'll go over those as we get into the presentation a little bit. First thing I actually want to cover is, before I actually get into the trading methodologies we use, and I want to talk about what actually drives the market. And I think most people know nowadays that we retail traders, we don't drive the market. This little graphic depiction here, these little marbles, that's retail traders. All of us. I'm a retail trader. Most everybody, I'm sure everybody else here is a retail trader. We're small traders. We cannot move the market. We just can't. We basically can trade if we want, but if we're trading against each other, we're just going to be causing chaos and chop. So these are all retail traders. The big marble back here, this is the institutions, and these are the folks that can move the market. And who are the institutions? Well, Goldman Sachs is an institution. HSBC Bank is an institution. Morgan Stanley is an institution. All the big investment banks. Then you add to those hundreds and hundreds of hedge funds with billions and billions of dollars to invest. And then you have the 401ks. These are lots of 401ks that are individual funds that also do a lot of trading. Pension funds. Pension funds are huge. You think of all the different pension funds that a lot of unions have, and police officers and firemen, they have huge pension funds. That's where they invest as well. And so this is what actually drives the market. Now within these funds, especially investment banks, you have what's called algos, basically computerized trading. These are the folks who actually make these very quick, high frequency trades that you probably heard about. So when the institutions are in here moving a trade, our job as retail traders, if we want to make money, is to basically identify when they're in the trade and ride that trade. We want to be in when they're in, and we don't want to be in when they're not in. So what we're going to cover here is how I find these trades by using the compass system and the dominator system, so that I know when I take a trade, if it looks good technically set up on a chart, then I got to know that the institutions are in there driving it, because it's very important that we only take trades that institutions are in, and we don't take trades that institutions are not in. And that's even more important, because if you stay out of a trade that the institutions are not in, even if the setup looks pretty good, you're going to save yourself a lot of money, because you're going to end up bypassing or sidestepping a lot of losing trades. So that's what this consists of. This is what we're looking for. Just remember, we as retail traders cannot drive the market. We can only participate in it. And if we're trading against other retail traders, we're going to lose, because our job as retail traders is to take money from, guess who? Other retail traders who don't have the same information we have. So when you go in, when you sit at your computer and start to do some trading, you're basically in a war with other retail traders, and the traders who have the best weapons are the ones who are going to succeed, because we've got the compass system. We know what the institutions are doing. The other retail traders that don't have a huge disadvantage when trading against us. So that's what this is. This is what we're looking to do. This is just this is an old version of an old SPY trade that I had up here. Not a trade, but just a SPY chart. This goes back. This shows you how we had this big pullback in the SPY, and since then, of course, we reversed way back up, and we're up almost to the high of the year back here. So the SPY has reversed pretty dramatically from that. This is just a depiction of what I use for my technical analysis. I use a piece of software called TC2000. All right, so, and again, this is the SPY trade. This is a SPY right here on the compass system. And I put this up because I wanted to show you how the compass system depicts institutions when they're in the trade and when they're not. And the key things that we're watching here is that we've got 4 lines here. These top 3 are the most important. The ones I use the most is this line here. This is what's called the current time frame momentum. This is telling you what the market momentum is on the current time frame. And this is the multi-time frame momentum. This is on across multiple time frames. And this was also showing that momentum. And this is the multi-time frame trend. This is the trend that the market is in over a longer period of time. And what we're looking for here is if these colors are yellow or red, that's a bearish. So when I see all red like this, I know that the institutions are selling the SPY right here. I know they've been selling the SPYs since this went from green to yellow. I know that there was SPY selling taking over right here, and I could have taken a SPY short right here and rode this thing down. And this is a daily chart, but we do use it on the 5-minute and during our intraday trades. But that's what these current time frame momentum, multi-time frame momentum, multi-time frame trend, and the current trend is this little red line up here. That's the 15 EMA of an EMA, which is what we use to tell us what the current trend is in the market. And this is the multi-time frame trend. So all red like this, or red and yellow, the market is bearish. The institutions are selling. All right, so that just kind of depicts what the compass system is. And this is running on Thinkorswim. I have this running on Thinkorswim. It also runs on Ninja, but I use it on Thinkorswim. And there's a few other things up here I'll talk about that the compass system produces when it generates things like this. This shaded area is a dynamic compression zone, and there's lots of pertinent information that the compass system will put on the chart for us. But these are the key things to find out if the institutions are in the trade or not. So let's talk about the strategies that I use in my room, in the options room, and also the same strategy obviously will be what I use to send out alerts. Since I send out alerts on a lot of the trades, I don't send out alerts on every trade I take in the room, because some of them are going to be too quick. I don't do a lot of scalping, but sometimes when I trade the SPY, if I'm thinking it's only going to be good for 3 or 4 candles, there really isn't any point in sending that out to the alert service, because it's not fair to the alert members. They don't have time. But most of the trades that we take will go out to the alert service. The main ones I use straight calls and puts, obviously. I also use what's called debit spreads, and I use weekly options expiration on these debit spreads. This is a little bit different than what you're probably used to, but this is extremely effective. I've tested this thing every which way, and these debit spreads using the weekly options expiration is the best way to do it for best ROI, best return on investment. I also do over earnings, I do what's called time spreads, and you may know them as calendar spreads. And the whole point of doing a time spread over earnings is to capture the volatility crush when the earnings comes out. It's trying to trade earnings in one direction or the other and guessing which way it's going to go is a real crapshoot. It's very, 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 very difficult to succeed doing that. You know, you can have good earnings come out. NVIDIA's earnings were great last night, and the stock dropped $15. So that can catch you. So what we try to do here is something that always happens when earnings comes out. As soon as earnings comes out, the volatility comes out of the premiums on the options. And this methodology is used to try to capture that volatility crush when the earnings comes out. And I have a video on how this works, how we do it, but just know that this is one thing we do. We also do what's called a weekly ATM strategy to capture premium week after week. And this is a strategy where we basically sell puts week after week after week at the money, roughly at the money puts. And we also have a longer dated put further out in time, you know, several weeks, maybe a couple of months out in time. We have a long put, and that's basically as what we use for protection and to keep our margin under control. We don't have a lot of margin necessary because we have a long put and we sell short puts against it every week. And we also have what's called the SPY super system, and I do this for very high probability trade setups that I'll go over, but this is typically just in the room when the SPY system, when the Compass system tells me the institutions are in the trade, and Dominator tells me that the market internals are the same as the Compass system. In other words, I'm getting buy signals when the Compass system is showing me along. We'll go ahead and take some trades in the SPY or the Q, and they're very, very quick moves usually, you know, maybe 2, 3, 4, 5 candles. And one other thing we do that I didn't put on here is put credit spreads. I do put credit spreads. The market is actually fairly good setup for put credit spreads. We have one on Goldman Sachs right now, and we will do those. And those are very easy to manage. You don't have to watch your machine every day or your charts every day. They're easy to manage and pull profits out of it. If they're structured correctly, they have a very, very high win rate. So that's basically where all our trades are going to be coming from that you'll see. And you will see when you get the alerts on it, you'll see which one of these we're using, and we tell you how to do that. So here we go. So this is just a chart in here of this last 60 days. Actually, this is from the middle of August to the end of October, I think. That's just a cumulative P&L of our last 60 trading days. I just kind of show you what our P&L looks like. This is what you want. You want it going lower left, upper right. We do get drawdowns. You can see that from time to time. All right, and I just kind of, what I'm going to do is I'm just going to kind of go over some of the results before we get into the details so you can see what the system has produced. This one I did a few months ago just to kind of cover these 4 months, March, April, May, and June. Very, very predictive of what we usually see, but I wanted to just kind of show this. And what I do is when I'm showing what the results are, I take a baseline of $2,000 in each trade. And that doesn't mean you have to use $2,000 in a trade. Some people use 500, some use 1,000, some use 4,000, some use 10,000. And you don't actually ever, generally I don't put the same amount of money in each trade, but to give you a baseline of how you would make out by taking the trades that we've been doing, I just say, okay, let's say we put 2,000 in each trade, leave it at that. So this was our March, April, May, and June. This was our profit over here. And this was the number of wins and number of losses. And you can see the win rate stayed between about 86 and 87.5%. And you know, the amount of money you make is going to be dependent on obviously how much you put in, but this is based on 2,000. It's going to be based on how long we can stay in the trade. How is the market? Is the market difficult to trade? Are we having a choppy market? That makes it more difficult. You can see here we had an 87.5 win rate, 35 wins, 5 losses, but we only made $4,700. The previous month, we had an 86% win rate and made $8,900. So a lot of it just depends on how long you can stay in the trade. If you have a trade that goes against you, maybe based on news or something, that's going to make a difference. But you can see that it's fairly consistent here for those months. And again, this is just a spreadsheet of some trades we took in April. And These are older, of course, but all I really use this for is to show what you can expect for your return on a trade. Now, a lot of people think they get videos and email invites, and they think that you can make 200, 300, 400, 500, 700% on a trade consistently. And that's not, you can't do that. It's just, you can't do it. They tell you can't do it. You're gonna have, if you get a win rate of 700% win, then you're likely to have had about 70 losses trying to get to that point. So our wins are typically somewhere between the low end, about 10, up to about, we get as high as 100 sometimes, but most of the time, it's really gonna be in the 25 to 40% range. That's what we try to shoot for. Some of these will be day trades, some of these will be trades that we keep overnight. And so this is basically what you're gonna expect. Somewhere in, again, the 25 to 40% range of profits, which is, I mean, pretty excellent. I did record the September, October, and November trades just so you can see them. These were the September 2023 trades we had here. And you can see that we had, in this particular month, we had 25 wins and 2 losses. A really good month. August was a worse month. It wasn't terrible, but it was not as good as this. But September was a pretty good month. The market was starting to move up a little bit. You can see the trades that we've had: UPS 23%, AI 43%. So we've had it was very consistent. This was probably one of our bigger trades, this STX trade. We had this. We kept it 2 days, 108%, using puts on that one. But I see I had a couple of losers here at Firm down 86%, Amazon down 100%. This was had some news go against us, and we get trapped in the trade. Nothing you can do. That's part of trading. So you're going to have losses. Remember that. But so the September trades, 25 wins, 2 losses, 92% win rate, pretty nice. $2,000 invested each trade produced $77.88 for a profit. And the trading conditions were very difficult in September. It was moving up, but there was a lot of chop. And this was a pretty good month for us. October, a decent month as well. Again, 24 wins, 4 losses in October, 86% win rate. We made a little less money, 44.80, but still not bad. And you can see again, you can see the wins that we have. You can see what the percentages we had. A little small one, Tesla 6%, but 61% in JD and 43% in RH. There was some nice trades. This is basically the results that you can expect this methodology and this system to produce for you. And you see we had Sedge, that was an 88% loser. Actually, if I'd kept that a couple more days, we would have made money on it, but it broke our technicals. We had to get out. Etsy 67, GNRC down 36%. That was a time spread over earnings. So they don't all work, but they work fairly consistently. So, and again, that was just about 4,500 in October. And this is November so far. We're only halfway through the month, so I haven't really totaled it up. But again, we've got 16 wins and 3 losses. So you can see that we're not taking massive numbers of trades. We're taking, very, very methodical approach and looking for only the highest probability trades we can find. And basically, those are the ones that are going to give us such a high win rate. But this has been a good month so far. This CCJ we just had the other day, 27%, 23 on Roku. We had a strangle here on Disney. This is a fairly new strategy that I'm implementing, that we're going to be using in the room. This was a put credit spread in NVIDIA here. We made 25% on. We lost 1.2% on Roblox, PNW down 59, and LTHM took this as a short, and it reversed pretty hard, 75% loss. So that's again, 16 wins, 3 losses. So again, in the 85% range. And this is the results that you'll see, whether in the room or whether you're on the alert service. Over time, it's going to come out to be about the same win rate. This just shows you these are some of the actual alerts that went out on stocks that we did and some of the results we had with them. This was when we did on Crowd. Again, we held this overnight, in at $6.90, out at $8. Again, 16% profit, $330 overnight. Pretty nice, really. This STX was the one I told you about. We were in 2 days. We get in at $370. Get out at $770, $2,000 profit with a $2,000 investment, 108% profit. Pretty nice. So again, you can see these now. This one here, This was Amazon. We were in for only 2 hours here. We're in for 315 and out 415 the same day. We were in for 2 hours, and it produced $600 profit with a $2,000 investment. So I won't go over every single one of these, but again, you see some of them are overnight. This was in for 81 prior to the close, out $1.21 the next morning, 50% gain overnight. And again, so that you can see these, this was a 30% gain overnight, and this was an overnight 38%. So we're going to have a lot of them in the intraday trades that we get out the same day, and then there's a lot of trades that we take overnight. And generally, they don't go up more than. Usually, we don't go. We have to trade more than a week. You know, if we like the setup, and we'll give it plenty of time to follow through and meet our criteria. And so that's why I'm trading options. You know, typically 2, 3, 4 weeks out. So we've got some time. So this is some more recent ones. Bristol Myers in at 165, 195. Again, $360 profit. So this kind of shows you what we have produced with these with the alerts. This was when we had a Loser on here. Etsy, that's the one I mentioned, in for 690, out for 225. We were in for several days. Tried to have it come in our favor. It didn't turn around. It broke our technicals support levels. We had to get out. We had to take a $930 loss on that one. So just, and I show you that just to let you know that we don't have 100% winners. Nobody has 100% winners. We have some losers, and you have to expect those when you're a trader. All right, so let's talk about, now we know about the what we've produced for results. Let's talk about the alert service, who it's for, what we do with it. So it's designed for day trades and short-term swing trades. That's what this is designed for. It's designed for people who can't basically watch the market all day. You'd like to get the trade, put it in when you see it. You just go ahead and put it into your platform, and you'll get another text generally that's going to tell you when to get out of the trade. In other words, to set your profit target, and you set it in there, and then you just you don't have to watch it all the time. So it's designed for traders who can't watch the market all day. You're going to get real-time alerts on the highest probability trade setups. As soon as I see a trade that I like, and it's a high probability trade setup, and that takes a lot of vetting to get to that level. Once I find one, and it'll go out to all of the members on the alert service immediately, and it's very, very quick. I generally receive it on my phone. I monitor that. I usually receive it on my phone in about 5 to 10 seconds. So it comes out pretty quick. It depends on your carrier, of course. And we're only going to be doing this on the highest probability trades. And we do that by identifying the institutional involvement in the trade, what the market internals are, which we'll talk about. And I do technical analysis on every stock that I look at to try to find, if I've got 4 or 5 really good high probability trade setups, then I'll do technical analysis on each one to take the 1 or 2 that are the best. So that's how we find these trades. And those are the ones you'll get in the room and you'll get on the alert service. So how do the alerts work? Okay, so you're going to be alerted by an SMS message. It'll come right to your phone. You just, when you sign up, you become a member. Your cell number is put in the database. Every time an alert comes out, it'll go right to your phone. And one of the things we say in the room is we trade the best and skip the rest. This is the key here, is we're going to skip the ones that don't have institutions in them. We're trading the very best trades that have institutions in those trades. That's it's really important because we bypass a lot of trades that might look good on paper, and some of them will win, some of them will lose, but overall, they're not going to help our ROI. So every alerted trade is going to include, obviously, the stock symbol. It'll include the option strike price that that we're taking. It'll include the option expiration date, obviously, that you got to have, and the price to pay for the option. And that may be a range. It may say $1.25 to $1.30, or it may say $1.05 to $1.10, or it might just say $1. And again, when you get that's the price we're shooting for to try to get in. Sometimes the stock will take off, and you've got to wait a little while for the stock to come back and get you filled at that price. But typically, I recommend waiting to get filled at the price that we put on there, because most stocks don't just keep going straight up. They'll pull back. And the exit price may come with the original alert, but generally not. Generally, I'm going to put an exit price on a separate alert, and you want to put it in as good till canceled. So once you put that trade in, and you've got a sell price on the stock, You want to make sure it's good till canceled, so it's active when the market opens the next morning. The market opens 9:30. You want to have that trade working, because a lot of times if you get a gap up or a gap down and it's going in your favor, that's when you're going to get that closed out. So you want to make sure that you have that good till canceled on those trades. So again, most of the time you're going to get a separate alert for the entry and another alert for the exit. All right, so you've seen some of the results that we get. I mean, they're really high. I say we typically 85 to 92% is our win rate. We make money just about every month. I've been had this room since January of 2022, which, by the way, if you're watching the market, you know that was the very first month of the beginning of the bear market. So we traded in a bear market for about 15 to 16 months. Now we've gone to more of a neutral market, and in those 22 months, we've had we have 22 months now. Yeah, 22 months. We've had 21 winning months, only one small losing month. But every month but one has been a winner. And listen, that's pretty high. That's very, very difficult to find services where you're going to get that much consistency as far as win rates are concerned. So how do we identify these results? Well, what we do is we're able to identify when institutions are driving a trade. That's what we talked about with the Compass system, when the institutions are in there. When the market internals are heavily bullish or bearish. That's another piece of software I'll show you that I use. The market internals are different than the Compass system, because they're really not showing institutions, but they're showing the number of stocks going up on up volume and upticks versus the number of stocks going down on down volume and down ticks. That's market internals, and that also gives you a good indication that if the Compass system is bullish and the market internals are bullish as well, that you've got double edge in the trade. So, and I should really change this. We only take trades when both of these are in our favor. That's really not true. If the market internals, what's called the dominator system, if that is neutral, I don't have, if I have 500 stocks going up and up volume and upticks, 500 going down on down volume and down ticks, that's a neutral. That's neutral market internals. So, but I'll take trades when the market internals are neutral if the Compass system is still bullish, that the institutions are in there. And we'll show you some of those trades, but that's what I'm looking for. I'd like to have them both lined up, but they don't all line up all the time. So then I focus on the Compass system and take the highest probability trades that I know the institutions are in the market. That's what I'm looking for. Again, we trade the best and skip the rest. All right, so the two pieces of software that I use, along with my TC2000 for my technical analysis, is what we call the SPY Super System software. This is made up of two pieces of software. It's made up of a system called the Compass system, which I showed you briefly, that identifies stocks that are being moved by institutional buying and selling. It also identifies stocks that do not have institutional buying and selling moving them, so they can be avoided. That's really, really important. And that's the system I have that runs on Thinkorswim. The Dominator system runs on Ninja. It runs on Ninja 8. Dominator system displays the market internals, and we'll show you those. It produces buy or sell signals when the difference in the number of stocks moving up on up volume and upticks is tremendously greater than the stocks moving down on down volume and down ticks. And the discrepancy needs to be huge. You need to have 700-800 stocks moving up on up volume and upticks versus 100 stocks moving down on down volume and down ticks. Then you'll get a buy signal on the Dominator system, which I'll show you. All right, so those are the two pieces of software that we use to find the institutions. Again, remember what I said at the beginning. The way that you become a successful professional trader is to be able to identify when the institutions are in a trade and be able to follow them along. And if you don't have that information, you're at a huge, huge disadvantage. All right, so this is the institutional money flow. This is just a blurb that tells us how we've been so successful. Again, we use the market internals Dominator and the Compass system in combination. That's been the cornerstone of what we've done here, is absolutely true. Together, these systems provide a comprehensive view of the markets. We can see exactly what the institution is doing and what the market internals are, and we can make really informed decisions to take the trades that those match. And again, this synergy ensures that I enter the trade strategically, aligning with the institutional activity and avoiding stocks that are lacking such support. Really important. Trade the best, skip the rest. Very important to skip the rest. All right, so that's going for that. And again, this does separate us from everybody else, other people that are not using this, and this gives us a huge edge. So the compass system, let's talk about the compass system. We'll tell you that, and then we'll go in to show some charts, and we can see these things, how they're actually working. So the compass system identifies when institutions are creating a trend. This is what we need to know. So how we do that? We do it with what's called a triple screen assessment. A triple screen assessment is a fancy word, a fancy way of saying fractals or multi-time frame. We're using multi-time frame, and we're looking at multi-time frame for momentum. We're looking at multi-time frame for trend. We're looking at multi-time frame for money flow. When all of these things are going in the same direction on current time frame and multi-time frame, current time frame, multi-time frame, current time frame, multi-time frame, then the chances that that trade is not being created by institutions is almost nil. I mean, it's possible that there's some that aren't, but generally speaking, when you have those lined up, that you can assume that the institutions are driving it at least 96, 97%, which is what you want. That's pretty high. So that's what the compass system, that's how it identifies institutions. The market internals dominator software. This is a software for market internals. It looks at the market internals for 5 indexes. It's looking at the indexes on the Dow, looking at the market internals on the Dow, the New York Stock Exchange, the Qs, the NASDAQ, the S&P 500, the SPY, and the Russell 2000. It's looking across individually across all 5 of those indexes. Then it analyzes, as I said, it analyzes the number of stocks moving up and up volume and upticks and versus down volume and down ticks for each one of those indexes. And then it looks across all of the indexes combined. It adds them all together and makes a determination as if the discrepancy is enough to generate a buy or sell signal that the market internals are in our favor. So that's what it's going to do. This large disparity here is going to generate the buy signal and the sell signal. And again, it can be used in conjunction with the compass system to identify even higher probability trade setups. This might sound a little confusing. It's really not. We're just looking for the information on are the institutions in the trade, are the market internals in our favor. Those 2 things are very, very important. So we're going to look at some charts, and I want to show you some charts of trades we've taken, and I'll show you both the compass system and the dominator system, so you can see what we do. All right, so this was a trade we took not too long ago. This is Moderna. This is the Moderna daily chart right here. See, it says daily. This is the Thinkorswim platform, and this is the compass system. Now, the compass system, you can see here, there's a couple of things. Remember, I told you that this is the current time frame, multi-time frame, and multi-time frame trend. These things are very important. Now, notice when we took this, you see how this shaded area is up here? That's called the dynamic compression zone. Dynamic compression zone is just what it says. It's a compression zone that's created dynamically within the compass system when it occurs. You notice when the stock broke out of that dynamic compression zone right here and broke below, this is a VWAP, which I don't use on the daily, but it broke down below this 15, touched the 15, broke. This was our entry into Moderna, short. And we just took some puts in it. And we wrote it down a couple of days and we took profits in it. It was a nice, very nice profit. This was about 84 to about 76. This was a pretty nice trade. And then you notice that in the case of this on the daily chart, you see how the current time frame here was green. So we couldn't go short here. It switched over to yellow. Now we start to watch it to go short. And as soon as we get a breakdown off this 15 EMA, this is where we took it. We had obviously the compass system is telling you pretty dramatically that this is a short. The institutions are selling Moderna. All right, so we'll move on to here. This was Amazon, and this was a long. And this again was a daily chart on Amazon. So the Amazon trade was, if you look here, you can see we had pretty much green across the board, green and blue across the board. We had the multi-time frame trend was still a little yellow, but it was switching over. And sometimes I won't worry about that if I've got everything else aligned here, which I did. And what I was looking for was I was looking for a move on the daily chart off of this 15 EMA. You see the 15 EMA there? Yeah. I'm looking for a break above that, which we got right here, break off the compression, bought it right here, wrote it up 2 days, took profits, and get out of Amazon. But again, you can see that it's telling us that this like institutions are buying here. You see when it started to fade here, you see how it switched back to yellow. So you would be out at that point. Again, that's a daily chart. Typically, I've got 5-minute charts up during the day because we're looking at that. All right, JD, just another one here. And again, it's going to seem repetitive, but what I'm trying to do is show you how easy it is to understand when we know the institutions are in the trade or when we're not, and how we find them. And this is JD, right? This is a JD trade. You can see it went from the current time frame went from green to yellow here. So this tells us that we just went from institutions doing some buying in here to institutions selling, and the multi-time frame and the multi-trend was also red at the time. So we know this is a good breakdown. It's breaking down very nicely right here. And we took this and we took it during the day and held it overnight for just one night, and then we took profits in this thing, 61% profits on that. And again, it stayed red. You notice how it stayed red? We could have stayed in it for multiple days in this thing because it stayed red all the way along until you get to a blue change over here. But we were happy with the 61% profit in JD. Dollar Tree, this is another one here. This was another daily chart that we saw this, and we actually took the trade intraday and then held it overnight. But this was where we took it. And you notice that the amount of selling here is massive. The institutions are selling this thing off. It's just a matter of trying to find the right time to take the trade. And these candles were pretty small, and we were coming out of this dynamic compression zone, and we broke below it, but not much momentum. Here we got a big thrust to the downside, and that told us that we go ahead and take that. We held it overnight, and we closed it out the next day right here on Dollar Tree. And again, institutions selling the heck out of this thing. DDOG, same thing here. Again, this was another short-term trade. This was a daily chart. You notice that the multi-time frame momentum and current time frame momentum is yellow, selling, multi-time frame trend, red, selling. And we're coming out of a dynamic compression zone. You see the dynamic compression zone we broke down out of right here? This is the dynamic compression zone. We're breaking down out of that. That's a good entry point. So we took it short here, took 21% profit on just a quick overnight trade. That's Datadog. It wasn't too long ago either, actually. This was Crowd, and I'm showing you bullish and bearish. And I just want you to kind of get used to seeing the chart, the compass system on the Thinkorswim chart. Again, you can buy this compass system and have it installed on your Thinkorswim platform. Right, I'll put it on there for you. You'll have exactly the same setup that I've got on here. But this was Crowd. Here's where their earnings are right here. See this big gap up? Notice how this went blue. This was blue. This was green. We took this long right here off of this big earnings move, and we took a quick 20% profit in Crowd. And it stayed pretty. We were getting a little choppiness here. Notice the yellow, blue, but this was staying green and blue the whole way across. So we took 20% profit, not bad. Amazon, a nice one. This is a 5-minute chart. Now this is what the compass system looks like when you switch over to the 5-minute. Works in multiple time frames. So again, why would you take it here? You see how this is compressing, and then we got these pink arrows here are what's called pop out of the box, pop signals, and they tell us when a compression is this is not a dynamic compression, but any regular compression is being broken. And we took it here. I probably should have taken it right here, but I didn't because you see this yellow here, but this went to green and everything was green. So when this popped up to here, I took this off this pop out of the box signal right off the 15 EMA, and we stayed in this trade for 45 minutes, and we were up 32% just buying some calls on Amazon. ENPH, this is a short, and this was another nice trade. We made 20% an hour on this one, 5-minute chart. Right, so here's compression. We see the compression. You see all the red here. The institutions are selling the heck out of this thing, right? Institutions selling. So across it's coming, and we're looking for a good entry here. Now we got a pop out of the box signal right here as the price came off the 15 EMA, popped down. So we got it in right here, and we stayed in it for 1 hour, and that's about 12 candles or whatever it was, but we were in for 1 hour, and we just rode this thing down, and we get out somewhere down here. But you see this nice pull down, and again, that's a pretty nice little move in ENPH. But it was telling us that we don't have to sweat these because the institutions we can see the institutions are selling this off. We know there's no buying coming in here right now. We get a little buying starting over here. We're long gone before that happens. In Verizon, this was a really interesting one. Verizon is kind of a slow moving trade, doesn't have a lot of bid-ask spread is pretty small. So we get in right here, coming off of the VWAP. This is a 5-minute chart. This volume weighted average price is a nice resistance level. We get in right here, and we've got 50% profit in 1 hour. We get in for, this is cheap. We paid 45 cents for these calls. And they're at the money calls. We paid 45 cents. We get out for about 65 or 67 cents in an hour. That's a big profit in that particular trade. All right, so I'm going to just run through some more of these charts, but I want you to see what the charts look like. Again, bearish, coming off the 15 EMA. Here's a pop out of the box signal. Again, you see how this is, the institutions are selling off. You can see easily that the institutions are selling the SPY, and this is what's called the SPY super system. So what's the SPY super system? Well, this is a system when we have the compass system bearish, which we had obviously here, and it's breaking down off the 15. Right, so this is a short for us. What we look at is we look at the dominator system at the same time. Here's the dominator system at the same time, kind of coming out of compression. Dominator system is telling us what the market internals are. It's made up of a black background color, which is dark pink. Dark pink background is bearish. Dark green background is bullish. So we knew we had a bearish internals on the SPY because we had a dark pink background. We also had sell signals. You see these arrows. These are sell signals that the dominator system is producing because the market internals are very bearish right here. So we had a bearish compass system, bearish dominator system, perfect SPY super system trade right there. This was a quick one. We had a Netflix, 20% profit in this. Again, coming off the VWAP on a 5-minute chart, right? Coming off the VWAP, here's where we get in. Notice how it went from blue buying to yellow selling. Perfect entry for us to take it because we just started selling again. We get in right here and we wrote it down for 20% profit all the way down to here. And that was on Netflix. And again, institutions were selling it off. You don't have to worry about big reversals on you when that happens. Now we have members who trade the SPY, the Qs, the futures right off the dominator system. This is a trade off the dominator system. Again, you can see the dark pink background, bearish. You can see the sell signals. This is where we get in right here as it broke down. And 3 points, $250 profit per contract off of the SPY without even looking at the compass system. This was just the dominator system. Tesla, again, 30% profit in here, out here. You just, I'll run through these because they can get redundant, I know, but I want you to see see how it went from blue to yellow here on the 5-minute chart. Buying, selling. Everything else was already selling. Just jump in there off of this pop out of the box signal. You get in here and you just write it down right to the end of the day. 30% profit on the Tesla trade. And this was a Tesla trade we took overnight. Now we will use overnight trades. And in this particular case, we had some bearish setups on Tesla for overnight. You notice everything is yellow and red right here at the end of the day. Everything is selling. We have a pop out of the box signal right here at the end of the day. So we took some puts on Tesla to hold overnight. We got fortunate. Tesla gapped down the next day. We dropped from 112 to 120 to 112. These puts that we got in here, we get out here, this thing went up about $7 a contract. A big win in Tesla on that. And we depended on the compass system to tell us that they were selling still going. All right, this is a chart I just show. I do use some what's called Fibonacci reversals. I don't know if you're familiar with those are, but a Fibonacci candle is a little different structure than a regular candlestick. It uses 2 candles to create a candle. But the nice thing about it is that it identifies reversals for you. If you have a candle that has a wick and a tail, and you go to a flat bottom, green candle like that, that's a Fibonacci reversal because it took 2 candles to get that. So that means that you've confirmed the reversal to the upside right here. And as long as it stays bullish, you notice that the bottoms of the candles are going to stay flat all the way up. That's Fibonacci reversal. So it helps you get into the trade. It also helps you stay in the trade, as you're not getting all the whipping around that you see with regular candles. As long as you get flat bottoms, you can stay in. You get this, you take your profits. This one I want to show you. This is one we use. What I usually do is I look at the daily chart first, then I look at the 5-minute chart, and I make sure that the daily chart and the 5-minute chart are both aligned in the same direction. So this was QSR. And see QSR right here. So you can see we got blue and green. Everything is bullish on QSR right here. We know the institutions are buying. We went from yellow to blue, and we were already green. Institutions are buying. So we took an intraday trade on it. So this is the daily chart. So I know that it's aligned up on the daily. Then I go to the 5-minute chart. The question now is, where do I get into the trade? Well, basically, we had compression going on up past 11 o'clock, 11:15. And right here, we got a pop out of the box signal, right? This went blue. Everything else had been green. This went blue, and this was coming off of 15, so we took it right here. And we get a little yellow right here. But I wasn't concerned because everything else was staying green, and the stock was obviously institutions were in there. So we stayed in this, and we rode this thing up. This is the 5-minute chart. So this is where we took the QSR trade, knowing that the compass system was bullish on the daily and bullish on the 5-minute. So that was the trade we took. Now, in addition to that, I actually looked at the dominator in QSR. This is a dominator system in QSR. Dark green background, bullish background here. So that was very important as well. And so the pop-up here telling me when I get in here, is it compressed? I got in right here. Now you could wait until you get these signals, but this is where I get in right here. Is it compressed and then bounced up? But you could have got in right here and followed it up here as well. All right. Let me just grab a drink of water here. Okay, got my water. I'm back. All right, so this was the one on the SPY, and I want you to just notice that you see how we go from a black background here, which is basically a neutral. We don't really. This tells us we have no direction. So we go to this dark pink background with this right here is where I bought this. See with the buy the sell arrow? It's bearish. You see it's dropping below the 15 EMA, which is right here. This is where we took the trade on the SPY, and boom, it just comes down. This is like quick trade. Three candles to the downside. And boom, you're out of the trade. Right down here is it reverses, but you made a nice quick little profit. And this was another one on the SPY, just so you can see the dominator system as far as what it does with buy signals. See all the buying here? Light green background, somewhat bullish. Very dark green background, very bullish. And buy signals all the way up. You could just stay in this thing all day. And Netflix, same thing. You probably wouldn't catch a candle like this, but as it compresses and then moves, this is where you would take a buy right here, and it just compresses and then finally shoots up. Now these little red candles you see, these are typically the retail traders trying to pick the top. And they're coming in right here, they're trying to pick the top, and then institutions come back in and just flood them, and they take the money right out of their pockets. And same thing here, another SPY trade. Again, riding along the 15, pops right up here. We get a nice buy signal here on the SPY. We can just take it and ride it up. And you're not going to ride it through this stuff. You're going to, a bunch of signals go away, you get it, you will get out. This was actually at the end of the day right here at 4 o'clock. So you just take this to the end of the day. All right, so those are the charts that showed you the compass system on Thinkorswim, the dominator system on Ninja. Those are what I use. And you may be interested in those, you may not be. But I just want you to show, I think it's important to understand where I'm getting my trades from. When you're on the alert service and you get a trade, it's nice to know where that trade came from. And if you're in the room, we talk about these all the time. We go over the exact specific setups, why we're taking them and why we're not. So this was a comparison I did when the compass system, when the dominator system first came out. Dominator system came out last October. So what I did was I had only had the compass system up to then. The dominator was new. I took all the trades from October 1st to December 28th that the compass system were giving me either bullish or bearish. They either lined up with the institutions were in them buying or selling, but the dominator system was just neutral. I had no dominator system aligned here, but it wasn't against me. It just was neutral. We had 129 wins and 12 losses for a 90.2% win rate. That just used the compass system. Now, when I had trades that had the compass and dominator system aligned, either bullishly or bearishly, same time frame, 113 wins, 2 losses. So not as many trades, but a 97% win rate. This was crazy. And now the market was very strong during this period. So let's understand that this probably inflates the win rates here on these because the market was so strong. It was actually relatively easy to trade. So that helps a lot too. And this is just kind of a little recap of what we did during this year. We finished April with 19 wins in a row, followed by 10 wins in a row in May. So we had 29 wins in a row. That's probably our best streak this year. I think our worst losing streak right now is 3. So I guess, again, investing $2,000 in each trade in that period of time, I produced about $11,200 in profit. Just kind of a recap, just to show you what we can produce with these particular pieces of software and with the trading service that we have. And again, we just recap the strategies: straight calls and puts for the in the room and for the alert service, debit spreads using weekly options, time spreads over earnings, which are calendar spreads, capture volatility crush, weekly ATMs, which is basically selling premium week after week after week against a longer dated long put to keep that the margin down and to protect us in case the stock turns against us. We also do put credit spreads, which I didn't have listed here, and the SPY super system, which is called out in the room. And these would be very high probability trades to catch SPY and Q moves when the dominator system and the compass system align. Right, so those are the strategies that we generally use in the room. I typically don't go into things like iron condors or butterflies. They're a little bit too complicated for most novice traders or even some experienced traders coming into the room. So even though I do trade those, I don't put them into the room. All right, so this is what the alert service looks like. Again, just a graphic representation of this. You can see you're going to have the come up on your phone with the stock and the price, etc. Now, this is the alert service. This was the alert service, and this was through September. This is about 53,000 now, so for the year, so pretty good. And what we were doing before, we were using an annual subscription for the alert service of $9.96, a quarterly for $2.96. But for this Black Friday deal on this, you can get the quarterly, which is the same, $2.96. But the annual subscription to the alert service is $7.48. This is really, really good, and you have to use what's called Black Friday. Now, in the chat box here in the room, Rory has put in all of the links for buying these things. And if you have any questions, you can call Rory about any of these specific ones. But this would get you the alert service for a year, and this is really, really a good price. I mean, you divide that by 12, you can see how inexpensive that is. If you just want to try it for a quarter, then $2.96. And again, call Rory for that information. Now, the option room, the room itself is you can take the alert service, but you can also take the room if you want to be in a room where somebody's trading it 5 days a week, all day long. And this is the Black Friday special offer. It's $849 for a full year, which is really cheap because it's been going for about $1,700. $849 for a full year. Now this is going to be good till Sunday only. And use the coupon on any of these trades you do, any of these deals you take. Make sure you use the code Black Friday. That will get you the very best annual rate on all of these things. And you can do this for $148 for a full month, that's pretty fair. But that's really cheap for the annual one. So this is for the trading room. This is where you would be in the trade room. You can come in there every day from 9:30 to 4. You'll get a lot of detailed education. You'll be part of the Discord room that we have. You get a lot of education on your trading. Now the super system, this is what we were doing before. Now I left this up because I wanted to show you what it includes. This is the SPY super system. That includes the compass trading system that we talked about. That's the Thinkorswim compass on the Thinkorswim platform. It includes the market internals dominated trading system. That's the dominated system on Ninja. It includes the text alerts for 3 months. That's what this did. And the trading room for 3 months. It also includes a scanner, which I'll show you when I get done, a Discord trading chat room, which have a lot of people in there, 2 other professional traders in there helping everybody. Wise way to trade options masterclass, which this is basically, I have about 28 videos on compass indicators, the denominator indicators, how to find the highest probability trade setups, and then descriptions of every single one of the strategies that I use and how to use them. And it includes full installation customer service. They will put these on your machine. You don't have to do any of the technical work, and they'll look just like mine. But for this Black Friday, the SPY Super System, which includes everything we just talked about here, that was inexpensive, is $14.99. Again, use Black Friday as your code, and it's going to expire at midnight on Sunday. And this is really, frankly, this is really a good price. We haven't done prices like this, and I know I've been doing this a good long time. And again, you can call Rory at 686-732-4656 if you're interested in that. All right, so these are some reviews of my room. I've got a lot of people been in my room since I opened it, January of 2022, and they're still in there, and I really, really appreciate that, the loyalty. But obviously, if they're still in there, they're making money, and that's the whole point. So those are the deals, the offers that we have. If you go to the chat box, you can just click on the link there, or you can call Rory anytime, and he will do that for you. And I'm going to take a couple minutes here and look at the questions. Gary, you know how to use TradingView. Is your system compatible with TradingView? The Compass system will only run on Thinkorswim or on Ninja. Now, I use TC2000 for my technicals, but you have to. The dominated system, by the way, can only run on Ninja, so it's not really compatible with TradingView. But you probably use TradingView for I don't know if you trade off of it, but you probably use it for technical analysis, which is fine. It looks a lot like wealth charts. No, I don't trade with Hubert. I know Hubert, but it's different. It's not like the wealth charts. It's completely different. It's using different criteria. It's crunching a lot of different data to get the information that we've got. How do I determine where to put protective stops? It's a good question, Jerry. Listen, when I take a trade, this is important. I take a trade. I'm getting in based on a technical. Now, I'm always looking at the daily chart, right? So the technicals on the daily chart are the most critical thing to me, because if the daily chart is strong bullish and I go in on a 5-minute chart that's bullish and the stock goes against me, but the daily chart stays bullish, then I can stay in the trade. And what I do is I actually stay in the trade until my technicals break. It breaks my support or it breaks my resistance levels, because I want to give the trade some time to work. So I don't actually put a protective stop on. Now I do a protective stop on my weekly ATM. The weekly ATM, what I do is I actually take and write puts, sell puts against at the money position for a stock, and then I take a longer dated lower strike price. Let's say I'm selling strikes at 100. I'm selling the puts at 100. I'll have a 95 put 3 months out that I'm holding as a long to protect me in case the stock turns around and goes against me. If it does that, I can buy back my short put and I can hold my long put and write it down if the stock continues down and make money that way. So it's very well done. But I don't have protective. I don't put protective stops on any of my other positions. I don't have any hard stops in. I always do it with I'll put an alert. I'll put a line on my chart, get an alert, and let myself know. But I don't want to be posting any stops, physical hard stops that the market makers and the ECNs can see, because they can see that and they'll pin those stops. They'll drive the stock down until it hits your stop price, and then they'll turn it around and send it right back up again. So Compass also installs a Ninja 8. Yes, William. Compass can also go on Ninja 8. I use it on Thinkorswim, but it'll go on Ninja 8 as well. Gary, thanks. Good. I appreciate you like the presentation. You do technical analysis on TradingView. Yeah. See, I do my technical analysis on TC2000 because I can do more detailed. I can put my 50, 100, 200 day moving average I can put some simple, some exponential moving averages on there. I can draw trend lines. I can put what's called algo resistance and support lines that I draw, and I put those on TC2000. So when I find a stock that comes up in my scanner, and I look on it in TC2000, it looks like a great potential trade. Then I immediately look at the compass system and the dominator system, because I want to make sure that stock that I'm looking to take has got institutional buying or selling. I mean, it's as simple as that. I won't take them if they don't. All right, any other questions here? I know it was, I tried to keep it fairly brief. It was about an hour, that's not bad. I know we ran through a lot of these things that you may have found to be a little confusing in it, but I wanted to point out the results we've had and how we produce this 85 to 92% win rate, and the fact that when you get a trade on, if you're in the alert service, when you get a trade, you're going to know where it's coming from. I mean, how did I get that trade? I just didn't pull it out of the air. A lot of alert services, you get the trade, you don't know what the criteria was for that trade. How do they know your stop loss, Shamar? When you put if you've got let's say you've got an option and you paid $1 for it, and you don't want to lose more than 50%. So you put a trailing stop, or you put a stop on that. You know, if it gets to 50%, you're going to sell it, and you put that trade in there. Okay, it's active trade, so that if it gets there, all of those trades that are in this that you put in your platform can be seen by the algos and all the ECNs. They see all of that. They have all that information. They can see exactly what it's doing, and the algos actually write code to bust retail traders' strategies. They'll take a look at like a MACD crossover, and they will see where the MACD crossover occurs, and the algos will write software to make the MACD crossover look like it's going to work. And then when you see that MACD crossover, and you're using that as a technical, and you get in, you're jumping right in, and they know that. And believe me, they see this, and they actually write code to let those things go up. They'll come in and join you, and then they'll come in and slaughter it and turn it right around and drive it back down again. The algos are that's why if you have the compass system and you know what the algos are doing, or what the institutions are doing, you can avoid those kind of situations. And if you're just a regular retail trader and you're just following strategies that the algos also know about, then they can bust them with programs, and they do that. That's one of the reasons that it's become much more difficult to make money as a technical trader over the last few years, because they're writing algos to break all of these things. So the only way to avoid that is to be in it when they're in it and out when they're out of it. That's what we're doing, is we're picking up breadcrumbs. We're not going to ever beat the big institutions. It's not going to happen. We have to take our money from the retail traders, and the retail traders are the ones who, they don't have the information we have, are going to lose. And the more retail traders out there without having a compass system or a dominator system, and not knowing what the institutions are doing, then the better for us, because we've got a lot more people that don't know what we know. They don't have the weapons we've got. You know, we've got fighter jets, and they're coming at us with pea shooters. It's just it's an unfair advantage, but that's how you make money trading. I mean, it's really important. So yeah, that's why I don't ever put those kind of trades in there. You have a happy Thanksgiving too. Everybody have a great Thanksgiving. I appreciate it. Moving averages are lagging indicators. Do I use any leading indicators? You know, I mean, every indicator is a trailing indicator, because they're being produced by something that's already occurred. I mean, you know, 50 EMA or any EMA, but it does tell you what the direction of the stock is. The only thing, the compass system is leading in the fact that it knows what institutions are doing. So if you know what the institutions are doing, for example, if you know that they're buying, they're coming into a trade and they're buying, then that's basically a leading indicator, because it's telling you on the right-hand side of your chart that if the institutions are buying, and you know they're buying, that the likelihood of that stock going up is extremely high. So in that case, it's a leading indicator. But anything that's using price on the 5-minute chart or on the daily chart, when it's doing the calculation, I mean, a candlestick is not a leading indicator. You can interpret them that way based on their structure or the combinations of candlestick. I mean, you see a shooting star at the top of a trend, you can assume that's a bearish, but you can't really take it until you get confirmation that it's reversed. So they'll give you some indications. And one of the things I use on all the trades I take is I use relative strength and relative weakness. I make sure that the stock I'm taking has got relative strength to the SPY. And I'm not talking about RSI here. I don't use RSI. I don't think it's any good. But I do look at the SPY, and if a SPY is moving sideways or going down, and I've got stocks that are moving up, then I've got relative strength. And that relative strength is very important because it allows you to stay in a trade with a lot less fear, because the fact if the market turns against you, if you're long that stock and the market turns down hard, that stock's not going to go down as fast or as much as the SPY is because it had relative strength to it. And the same thing with relative weakness. All right, so that's my comment on leading indicators. And again, all of the links to the software is right in the chat box if you're interested in looking at that. And also call Rory or drop your name and number into the question box right here. All right, and I appreciate everybody coming to the webinar, and I certainly wish everybody a great Thanksgiving, a happy Thanksgiving. I hope you enjoy it. Market's open Friday, so I'll be in the room Friday morning until 1 o'clock when the market closes Friday at 1 o'clock. And again, I appreciate very much everybody for everybody being here and for all the great questions. Thanks very much, and everybody have a great Thanksgiving. And oh, what's another question here? Gary, Shiva, isn't that illegal or normal? You mean for the ECNs and the institutions to know what you're doing? No, it's completely legal. They see all that information. They know exactly that's how they base what to do. And if you look at time and sales, you can see exactly what's happening. They can see exactly what's likely to happen. Heikin-Ashi candles are easy to read, you said. You use them in some of your strategies. Yeah, I mean, I use them, but I'll tell you what I use them for, Gary. I use them as a confirmation. If I'm looking to get in on a, let's say I'm taking a long, and I'm looking for the stock to pull back to some sort of support level, maybe the VWAP or maybe an EMA or something, or a dynamic compression zone, and the stock is popping out of the dynamic compression zone. I like to use Heikin-Ashis for my entry, because when I find one Heikin-Ashi candle that formed after 5 minutes, and I go to another one, and that Heikin-Ashi candle that formed has a flat bottom, I know that reversal has been confirmed without even looking at the regular candles. So it's much easier to find the confirmations at that time, and then it's easy to follow the trailing as it moves up. Now, when I'm thinking about getting out of a trade, I switch back to regular candles because I want to catch the top without having to wait for 2 candles to create it. All right, good questions. I appreciate that. Appreciate it. I hope to see some folks on my alert service. See some folks in the room here pretty soon. And again, the software is a huge edge to anybody who wants to be a consistently profitable trader. We try to produce consistently profitable trades in the room. That's what we try to do. And I'll drop this just for a second just so I can show you the compass system here. And I'll switch this over to the ES. This is the ES. This is futures, which will be coming up, but at 6 o'clock they open again. But here's the futures at the end of the day right here. This is about 1450. See where the dynamic compression zone. See where we've got selling going on. These are some of the alerts, the scans I have over here, and you get all the scans that I've got. This is a cascading up scan. This will show you when a stock has got 3 or more green candles in a row. You know, if you can imagine, on the 5 minute, if the SPY was coming down, and I ran a cascading up scan, everything I see on here is going to have relative strength. Anything, and if I look at the ones that are green for the day, not only do I know they have relative strength, but I know they're bullish on the day. So this is really important. There's a question here from what's this? Quarterly tech service does not recognize the Black Friday coupon. Yeah, you want to give Rory a call if that's the case. because he can take care of that for you. And again, his number, as I said here, is 786-732-4656. You want to be able to talk to him about that. He can take care of it for you. And the Black Friday is for the annual. Black Friday is for the annual. That may be the problem. Black Friday, that special is Black Friday. That is for an annual subscription. The quarterly subscription you can get for the price that's there. So the $296. So anyway, yeah. So that's the this is the some of the scans we've got here. I've got a cascading up, a cascading down. I've got one that looks for these pop out of the box signals. I've got several different scans that we can use. This is like the new yearly highs. This is relative strength versus a SPY. And I can keep these running all day long. And if I click on them from here, if I'm looking to see, let's say I'm looking for Doc N, I click on Doc N, it brings the stock up right over here. And it gives me all the information I need. So I can see what the compass system is doing on the 5-minute. If I want to see what it's doing on the daily, I just switch to the daily chart, and I can see all of that right from a click, one click up off of these scans. Okay, everybody. Listen, thanks so much for being here. I appreciate it. Appreciate all the questions and the comments. And again, I wish everybody a great Thanksgiving. I hope you enjoy it. I hope you enjoy eating turkey or ham or whatever you're going to be eating, and enjoy your time off. So again, I'll be back in the room on Friday morning at about 9 o'clock. So have a great one, everybody. Appreciate so much for being here.